Good afternoon, traders. This is Christian Farmer. It's Tribeca Trade Group, and this is your end of day recap for Wednesday, the 18th. So we are progressing through the week with, just a market that's been all over the place from day to day. I think kind of inconsistent. It could be that we're carving out a range and to, formulate the next direction. But overall, what I try to do in these videos is just pretty much give you an objective view. I tell you, what we're seeing in terms of the price action, the indices, a little bit of macro, give you a sense of what's going on under the hood in terms of breadth. And then you can try to formulate an opinion. And as always, I try to go over some single name stocks and some setups and so forth. But I try not to be super biased, right? I try to basically say, hey, this is what we got for the day. This is what the trend is telling us, because mainly I'm a trend trader, so I do want things to trend. Markets like this, where it's been crazy back and forth price action, are not my favorite type of market. This is a very good market for scalping, because you are getting a big range of moves, both to the upside and to the downside. But this has been a pretty inconsistent market. And if you look at where we are by the way, risk disclaimer in front of you, everything that we're going through is for information purposes only, not giving out any advice or recommendations. If you look at where we are for the month, I think that's what you're seeing too, is just a lot of inconsistency. SPY, is only up about 70 basis points for the month, which to me is a bit disappointing, because October is a stronger seasonal month. Now, I do have the seasonal the seasonality of the SPX over time, right? And we know that, like, once we get to like the halfway point of October, really towards the end of October is supposed to be pretty strong, but it's also supposed to progress. So we're not really getting that right now. One of the things that I have in the back of my mind is that, not just for this situation, but in any situation, when everybody starts expecting one thing to take place, and I do see a lot of people referencing the seasonality does get better in October, and I get it. The seasonality has been pretty on cue all year long with what we've been seeing. August, September are weak seasonal months. They were weak months. But we'll see. I basically, I'm in the market, trying to basically manage positions, but it is not, because I am looking for the markets to trend a little bit. But I'll tell you, it is not easy with this price action. So SPY is just barely, you could even call it unched if you like, because 70 basis points isn't really that much. Qs have been outperforming, even though they've been kind of dragging a little bit. Where did they finish today? They finished down about the same as the S&P, down about 1.3% for the day. This should really be in red. And spot and IWM, geez, if you caught that move in IWM, congratulations on the long side. If you caught the downside in the move today, too, congratulations. The IWM, after showing some really nice relative strength, was down is down. Well, first of all, it's down 3% for the month, but was down 2% today. So I will go through all those charts. Unfortunately, I will go through bonds, which I'm just getting so tired of talking about at this point. As much as I've been talking, I mentioned bonds a lot on Twitter, and people must think, oh my God, he's a bond specialist. I'm not. I just, I've traded, ETFs institutionally. I did that for a number of years, and you do have to know all of the interworkings of, the bond relationship with equities, and and what the dollar is doing. It's good to have these in the back of your mind. I said something out on Twitter earlier saying, single name stocks, single name setups are great, but sometimes if the overall market is doing something like it's doing right now, they take a back seat. And it's important to understand that about the market, is that there are going to be times where it's a stock pickers market. But when the VIX gets around where it is right now, which is around the 20 handle, a lot of stocks begin to move together. So let's dig into some of this. But yes, bonds were the culprit again. Again, and I really try not to make too many. You'll find that I just don't make a lot of predictions, because the market's the market's smarter than I am. And I think if you've been trading for a while, you begin to realize this too. Sometimes it takes people a little while to figure it out. But I heard so many people tell, on Twitter, talk about, oh, that's it. The lows are in for bonds. That's wrong, because it's a new closing low for bonds today. Now, one of the things to kind of look at objectively, so this is, again, like we touched this area, but this is a new closing low for bonds, no doubt about it. So it's possibly that we have a bullish divergence, right? So with bonds making a new low or closing low, notice that the RSI did not make a new low. So something to watch. Sometimes these divergences end up not playing out. So I think what you want to see is the beginning of a bounce first. Again, there's a whole bunch of things that you could come up with here. That this could be a double bottom too, but it's too early. So people will predict. That's fine. And here's TLT, which also this actually made an intraday low, but did not make a closing low. But so someone just told me on Twitter that it looks very similar to last October. Maybe there's some similarity here, but it's too early to make that conclusion. By the way, look at the difference in the volume from this year to last year. There's a lot of volume that's being traded in TLT. So you also have the same thing going on here. If I zoom back in here, you also have the RSI, which again is the study down here, that did not make a new low, but it definitely did in here. Notice that there was a little bullish divergence on this new low too. And we did bounce. So we'll see. There was a bond auction today, which I was pretty worried about, because we saw what happened with the last longer dated bond auction. And it wasn't particularly pretty. So anyway, let's see if I'll bring this up for you really quick. Again, this is nothing to super analyze. I just wanted to show you the calendar for the rest of the week. So we have the 20-year auction here. We've got 5-year tips, and then I don't think we have another big bond auction this week. Again, we get T-bills and things like that. So in any event, maybe this is something to work off of, but we'll see. This is a new low for bonds. So for the 30-year. And here's where yields are, right? There's a lot of this going on too, I see on on Twitter. A lot of people talking about, oh my God, what happens if the 10-year gets to 5%? Sorry, let me just bring this up correctly for you. What if it gets to 5%? It doesn't mean nothing. It means nothing, because look at the other maturities. The 20 years already at 5.2%. The 2 years already at 5.2%. So who cares if the 10-year gets to 5%? I get it. There's a lot of things that are benchmarked to a 10-year yield, but another 10 basis points, another 20 basis points isn't going to really make that much of a difference, because you already have these things. And nobody making a fuss at the 2-year. So again, it's funny what people focus on. Right. But overall, yields going up like this, is it a good thing? No, it's not a good thing. Especially it's just more of a headwind for certain companies. Now, right now with correlations moving like they are, everything's it's a knee-jerk reaction when yields go up like this, when there's big volatility in bonds. But there are some companies that don't have to refinance their debt for a long time. Now, Apple's been I think has been a tough name to trade, but that they're sitting on a bunch of cash. Like, that might even be a good environment. But however, just because we kind of have ideas, the technicals have to kind of agree here. And, we have a series of, you can see how I've got a trend line drawn there. We've got a series of lower highs. So I don't care what, it's not going to make that much of a difference. It also depends, the bond yields are just one factor, right? You still have to be executing very well as a company, right? And, we've heard stories about China and lower sales in China and so forth. So, it's very important. It's a very important point as I go over this, right? Because I know younger traders, they get fixed on these relationships, but there's many other things going on. There's many other pieces of the puzzle. So I'll move on because I wanted to talk about the indices and how they closed. And yes, we took out last week's lows, right? So, So again, that's not a great thing. But the price action is getting very tight, right? But we are leaning to the downside. We're a little bit off the lows, but not much. The other thing that, I look for clues. One of the things that I said in yesterday's member video was that, we've been exploring, we could not break out earlier in the week, right? We touched the top of value here, touched the top of value a second time. And we're staying inside value for the whole week, but look at this, we fell outside the value area. So that's not bullish. That's not good looking at all. That's a break of this week's value area. If we get back and if we retake 43.57, then I might get a little bit more positive that at least we don't have a breakdown. But for now, you're going to see this. And at one point like this around lunchtime today, the price action was holding on to the bottom of value in Qs, IWM, and S&P, but you could see this is a lower low than last week. This is not positive, right? So, objectively, this is a very clear picture, regardless of October seasonality and so forth. This is a low. This is, pretty confirmed at this point that this is a lower high in the Qs. Right? Forget about where we were or, what we did earlier this year or what we did last year. We're just looking at the price action in front of us, and you've got a technical pattern here. Do we have a full-on breakdown here on the Qs? No, we don't. And, support was coming at 359.93. But it is disappointing to see that, price stalling, right where it needed to basically turn the corner to get out of this pattern. All right, so that's what you have for this, and then IWM, which is an absolute mess. So before I wrap up with the Qs, I'll just wanted to give you this level again. 360, 365.56. So even though you got a little bit of a bounce here with Netflix, Netflix is a part of the Qs, of course. You got a nice move in Netflix all the way up to that top of value 387. Tesla, I think, was a little bit green here. Tesla was down. So again, you can't really do a victory lap here with the stock up $2, because the stock fell $12 today. So I'm doing a lot of curb your enthusiasm because I see a lot of nonsense out there. But yeah, it is up right now. 245 is where this is trading. So you're up $2 from the close. The numbers were not great, but there's expectations, like there's a headline out that they're going to start delivering the Cybertruck, I think November 30th. So that's some positive news for the stock. Let's see what they say on the earnings call. But again, this is another one too. If you back this out, right, you got the same pattern lurking in almost so many charts, right? Here's your high back in September, right? This is September 15th, which is not a strong seasonal month, and we made a lower high right at the top of value and the trend line. So I would love it and I stay objective if it does something else, but right now this is not a great look. We're sideways. We're committed. This is committed to sideways right now. 235 is your support down there. All right. And I think I wanted to keep this video kind of short. I will go over IWM just to say how kind of tricky this is. There are so many tricky areas right now in the market. And I think that's kind of the best way to describe it right now. But here's the performance of IWM yesterday. Both yesterday, I guess when you add up the 3 days, you still have slight positive. Monday, IWM was up 1.6. Yesterday, it was up 1.1%, and then down 2% today. So again, there's some bullish divergence here too. But man, this is so difficult, I think. But very good for scalping. Any other areas that I wanted to touch on today? It's the same thing. Clean energy was one of your performers today. That clean energy ETF was down 5%. Look at the metals and mining, which were doing fairly decent yesterday too, down 2.6% today. Blockchain stocks, just a lot of traps, right? We heard about the possibility of a Bitcoin ETF being approved. If you chased any of that price action, you are seriously underwater. Home builders continue to sink. Even the gold miners, gold finished today up 1.5%. It didn't do anything in the regular market. This is the percentage change versus close column. It did nothing since the open. And if you decided like, hey, gold's up, I'm going to buy some gold miners, you lost on that trade because that went down 1.8% from the open. So there will be eventually better days for this market, but it's just not showing a lot of consistency from one day to the next. So that's what I kind of look for, a little bit tighter price action. We have seen the last couple days where buyers have kind of come in. It could also be a little bit of a function of we've got monthly options expiration, and there's usually a nasty day in there somewhere within that week of monthly options expiration. So maybe we're getting that out of our systems, but we'll see what tomorrow brings. All right, guys, have a great night. See you tomorrow.